So a few months ago, we did a Q&A video and it went really well. I enjoyed doing it. People found it useful. So I thought, let's do that again. So a few weeks ago, I asked people online, on Twitter, on Facebook, on YouTube to give me some questions for the video, and I got a few. So I'm going to go through those today. Hope you find them useful. First question is about taxes. It says, is there a simple rule about how much in deductions is allowed on your taxes? Now, this depends on what your filing situation is. If you're an employee, if you're a salaried employee, you work for a company or an employer, there's not all that much you can do to deduct from your taxes. So you can do ideco, you can do furusato nose, you can give donations to charity, although that's the same as furusato nose, the same kind of bucket. You can get a small deduction for life insurance and earthquake insurance and health insurance, I think. But that's pretty much it. If you have miscellaneous income, side income, and you have expenses that relate to that, you can deduct the expenses from the miscellaneous income, but not from your main income. And then I guess the other thing you could do is if you invest in real estate in Japan, you can use the expenses and the depreciation from that to reduce your main income taxes. And that's one reason that real estate investing is popular among higher income Japanese earners like doctors and lawyers and so on. Next question is about the pension system. So this person's paid in for 19 years and they expect to pay in for 29 years in total. How much pension could you expect to get? Now again, this depends on which pension system you're in. So if you're in kokumin nenkin, it's very simple to calculate your projected pension payouts because it's just a proportion of the total. So basically, kokumin nenkin, if you pay in for 40 years, for 480 months, you get the maximum pension, which is something like 65,000 yen a month. If you pay in for less than 40 years, it's reduced proportionally. So if you pay in for 20 years, you get half the pension. If you pay in for 10 years, you get a quarter of the pension. And 10 years is the minimum before you vest in the system and you become eligible to receive a pension. Now, this person is in the private education Kyosai fund, which gives you a slightly higher pension, and to be honest, it's really hard to calculate. The best way to do that is to look at your pension statement. So every year, once a year, you should be receiving a pension statement, either through the post or online, if you've chosen to get it online. And that will tell you, based on your contributions so far, this is how much pension you'll get, or based on continuing to pay in until age 65, this is how much pension you'll get. And that's probably the most accurate way to see that. Just to clarify, the full contribution period for a pension is 40 years and not 25. And to be honest, 18 man a month in the Japanese pension system is not bad. And if you think that's measly, then this is why we need to make sure that we're taking action to take care of ourselves. So by investing in ideco, by investing in NISA, by investing outside of tax advantaged accounts if you can, and just investing and saving as much as possible so that when we reach pension age and we're getting our state pensions, which are pretty basic, not very generous, we can still live the kind of life that we want to. Okay, I had a question about how to shield against failing US banks and banks in other countries. And this was very topical at the time. I'm sorry I didn't answer it sooner. Basically, there's two parts to this question. One is how to protect yourself from your bank failing and therefore taking your money with them. And the other question is how to protect yourself from basically an economic crisis that comes from the banks failing. And for that, I don't really have an answer for you. Assuming that you're investing for the long term, the best thing is just to ignore economic crises and just continue investing into diversified, index funds. And that basically means that you'll have a couple of years of buying very cheap assets while the crisis is going on. Now, in terms of protecting yourself against banks failing, in Japan, your cash deposits at a bank are insured by the government. They're guaranteed by the government up to 10 million yen. So if you have more than 10 million yen in cash, you should probably open an account with a different bank. Different branches at the same bank don't count, but different bank, and put your cash in there as well. And that's the general kind of advice for that. Can you break down shakai, hoken, the nenkin part, and its level of contribution to future finance? Well, like I mentioned earlier, with your nenkin, you'll get after you've paid in for 10 years, once you vest, you'll start getting kind of projections and predictions and how much nenkin you will get. You can look at those and see how that fits with your overall financial plan. And for most people, they're going to have to save and invest themselves to supplement nenkin. I think very few people are going to be happy living on basic nenkin in retirement. All right, I'm a US citizen living in the States with my Japanese wife. Could I consider retirement in Japan based on US IRAs and 401ks, etc.? Am I going to be taxed to death? Yeah, this is a tricky situation because Japan is not going to recognize US tax-exempt accounts as tax-exempt. They're going to tax them as if they didn't exist. And the US does the same. So if you have a Japanese NISA account, the IRS is not going to recognize that as tax-exempt. And this is going to be a problem for many people. If possible, if you're set on retiring in Japan, if you can cash out those accounts before you come, you kind of eliminate this problem. But it is tricky. I would seek professional advice before making that kind of move because the tax implications could be quite big. Would you recommend investing some money in real estate in Japan, like buying an apartment with a loan and lending it out? Is the declining population going to destroy the value of real estate, etc., etc.? I'm not a real estate expert. I would recommend checking out Ziv's channel. Ziv's done a talk for us and has lots of free content about real estate investing in Japan for foreign residents. Really good stuff. My impression is that there's lots of things you should consider. One is the tax advantages of being able to use depreciation from your rental properties against your income. That might be attractive to some people. Another reason to consider investing in real estate is for diversification purposes. So say you're already investing in the stock market and you want to invest in a different asset class that behaves differently. It might give you a bit of cash flow, for example. In terms of the population, again, my understanding is that you have to be very careful where you buy real estate in Japan based on kind of predictions of what the population is doing, because the population is not falling at the same rate everywhere. Some places the population is falling a lot, like parts of Tohoku are the worst in Japan, I think. And some places the population is growing because people are moving there. This is normally the kind of higher tier cities. And even within those cities, there's areas that are growing and there's probably areas that are declining. So you have to be very aware of what's going on and researching the kind of population trends. You can get lots of data from the government about population and households and what kind of people live in an area. And you'd have to think about all of that if you were going to invest in single property real estate in Japan. The alternative to doing that, of course, is to buy a REIT, which is a real estate investment trust. It's basically an index fund for property. So instead of buying one apartment, you're buying, a fraction of, a bunch of hotels or a bunch of residential areas or, commercial property. And some people find that less work, but it still gives them access to the real estate asset class. What are the investment choices for people who want to have a positive impact on the world. Now, I've thought about this a lot. I'm quite concerned about environmental issues and social issues and so on. But after looking at all the options, so we've got lots of funds, for example, index funds that claim to be environmental and socially positive. But often, if you actually look at the contents of the fund, it's difficult to see how they are environmentally helpful. So I've seen several kind of, green funds that contain oil companies, for example. How can that be possible? But it very much is going to depend on what the company putting the fund together decides to do. And my take now is that the best way to do that might be just to invest normally. So invest in a broad-based index fund and make more money, and then maybe donate some of that money to the causes that you care about, rather than investing less efficiently and still not really making all that much difference. It's a tricky situation. I'd recommend doing some reading. My conclusion was that it didn't seem worth trying to find environmental investments per se, rather just invest in a broad-based world index fund and then use some of that money to donate to causes that I think are worthy. What are the best investment choices for someone who expects to be in Japan for under 5 years? Now, this is quite tricky because if you leave Japan, you'll be asked to close your investment accounts here. So, say you had a NISA account with Rakuten or something. When you leave Japan, Rakuten will ask you to close your account and you'll have to sell all your investments. As long as they're in a NISA account, you wouldn't owe tax at that point, but it might not be the right time to sell. Perhaps there's been a market crash, or the banks have failed and we have a big economic crisis, and that is not the time you want to be selling your investments. So that's one issue. If you know you'll be leaving Japan within a few years, I would consider trying to find a way to invest in another country. Maybe your home country, or a country where it's going to be your base. That will let you keep your account even if you move out of Japan. One option seems to be maybe Saxo Bank in Europe. There's some brokers in Singapore that deal with Japanese residents. And Interactive Brokers Japan might be an option because they should be able to transfer your assets to a different Interactive Brokers branch in another country, as long as they're kind of normal ETFs or index funds. But we're not quite sure what's going on with Interactive Brokers at the moment. They're making a big change, but the details don't seem to have been finalized. So we're going to see what happens with that later in the year, and we will have some content on it on the site. Okay, so I've got a bit of a case study here. So it's someone who's in their 40s, married with 2 children, husband has a good job, takes care of the money, and this person has about 20 million yen in the bank in cash. What should she do? So her friends are recommending she invest 10 million yen into MetLife Sunny Garden, which I took a look at. It's basically they invest your money in the US, where interest rates are much higher. You get US style interest rates. They pay you. Now, of course, this is incredibly risky in terms of the exchange rate. So right now the exchange rate, the yen's fairly weak compared to the dollar. If the yen strengthens and all your money's in dollars, then you could lose quite a lot of money with this kind of investment. So definitely worth being careful with that. This person started NISA recently, isn't interested in building a business. Well, with the new NISA coming in next year, and the 18 million yen lifetime allowance, it sounds like, as long as this person's comfortable investing, they could put most of that money into a NISA account and then just let it grow tax-free until they need it later for children's educations or retirement and so on. If they're not comfortable investing, then I would keep some of it in cash, and that keeps it safe, and maybe try and invest some of the rest. Of course, real estate is also a possibility, but it seems like a bit of a hassle, especially for someone who isn't going to have that benefit from using the depreciation to reduce their income taxes. Personally, I would probably think about just using the new NISA system to invest most of that money. And then it'll be tax-free growth going forward. So I hope you found this video useful. If you haven't subscribed to the channel already, please subscribe now. It really helps us out. And I'll see you in the next video.